Trump is not playing about his soybeans. So let's take it right to the social media post on True Social that tanked markets today and brought my title of this post today, The Nightmare on Wall Street, when it seems like we're in a horror story right now as far as our pockets in trying to invest in this volatile market when Donald Trump and China are going back at it and the markets are going up and down, very volatile. But the tweet that set it all off is, quote, I believe that China purposely not buying our soybeans, and this is from Donald Trump on True Social, and causing difficulty for our soybean farmers is an economically hostile act. We are considering terminating business with China having to do with cooking oil and other elements of trade as retribution. As an example, we can easily produce cooking oil ourselves. We don't need to purchase it from China. And that's end quote. And that is what tanked the markets at the end of the day today. I was feeling good. I jumped into a QQQ call. I've been waiting patiently to get QQQ under $600. It fell below this morning. I was watching the charts. I got in. My contract was up about 8% or so. I went to the gym. I was feeling good about the day. Then I'm heading home. Checked my phone and I'm like, what is going on? It was all good just an hour ago before I walked into the gym. And then I saw this post on True Social that took the markets lower. But let's go a little bit deeper. Let's go over the scoreboards, which is the three major indexes that we follow: the S&P 500, the NASDAQ, and the Dow. So like we said, markets open lower today. I believe the QQQ, I'm not sure about the actual NASDAQ itself, was actually up, was actually positive for a little bit today. And then you can see right around here, we see that dip right after the market dissected that post on True Social by the President of the United States. Seems like we're back into April territory. It is October, so it's spooky season, and it looks like we're going to be dealing with a little bit of volatility. We didn't have very much volatility in September, maybe a little bit early on, and maybe there in a day or two. So maybe we got lucky in September. September was good, and so now we're going to have to deal with it in October. But the good thing is earnings season is kicking off. For what I've seen and what I heard, banks were doing pretty well. Nothing that really scared the market too much. And earnings season just kicked off, and that should hopefully be a catalyst to push shares higher. And we're just going to have to navigate this ongoing dispute between China and the U.S. So if you're investing, maybe it's a time to take advantage. Remember, red days can be opportunity. Some of the things that we have on our watch list, if they fall to those targets that we were looking for, that's time to take action and start buying shares on our long-term portfolios. Same things if you invested, or if you like to trade and invest in options. We do long-term investing in our long-term portfolio, and then we kind of mirror that strategy with options and buying time, going out as long as possible, or as long as it makes sense, at least. And if you want to learn how to trade options, there should be a link in the description of this video. I have an Options 101, and then you can jump in our investing community. It's on Patreon. It's all online. You can go there. You can see this video and other posts all for free. And if you really want to get busy, if you want to see my strategies, my experiences that have allowed me to really take back my own time and allowed me to fall in love with investing while making money doing so. I've had a pretty awesome track record in investing in options and long-term investing, and I want to share my experience and my strategies, my winning and proven strategies. Now, I'm not reinventing the wheel. I'm just looking at a lot of investors and kind of curated and made something that worked for me. Investing in companies that I understand, that I know, and then I kind of use and I'm a consumer of on a daily basis. So I'm investing in those companies, some of the best companies on the market, the ones that can handle, whether it's a pandemic, whatever the case may be. There's going to be ups and downs, ebbs and flows in their businesses, and then the economy and in the world is going to affect how those businesses operate on a long horizon over the long term. And I want the strongest financially fit businesses I can possibly find, because my money, I work hard for my money, put in a lot of time, whether I'm checking in, working for someone else, or investing in generating passive income. I work hard for that money, and I don't want to just throw it in on gambling, what feels like gambling, just throw it in on something with no real strategy. So there's proven strategies. You can join for free in the Patreon, or can join for $10 a month. You can see all my trades in real time and really dive into my strategies. Get to know me, I get to know you, and we can build wealth together. Okay? But like I said, we jumped into QQQ. It was up, and I think it's actually flat. So if you're interested in jumping in a trade with me, you can join that Patreon for $10 a month, and you can see exactly that trade that we are invested in. If you've been watching any of my videos, I am a big fan of DraftKings, and I believe shares have been under pressure past few weeks or so because of those prediction markets. Robinhood allows you to has a partnership. I believe it's Kalshi. One of the companies is Polymarket, but I believe it's Kalshi. I don't want to say the wrong name. But they have prediction markets and event contracts that you can bet on. It's very similar to what DraftKings is offering. And the popularity in those event contracts and those prediction markets have really skyrocketed. And it's put a real big damper on these sports betting companies like DraftKings and FanDuel, which are the two leaders. And I believe it was overdone. There's been heavy selling. But recently, past 5 days, DraftKings up 4%, but past month down 22%. So you can see right there when you zoom out how rough it's been the past couple weeks. So I've been buying shares. Unfortunately, it's been going lower and lower, but buying a little bit shares after it's dipped about 5%, 5% more, 5% more, adding more shares. I have a nice little collection of shares, and I believe in this company over the long term. I believe the sell-off in the shares was not warranted. I can understand some trepidation in investing in those companies. But as a long-term investor, I believe these companies are going to be great businesses and money makers over the long term as more states are onboarded, and they advance their technology, have better offerings, maybe have better ways to interact with their customers, be able maybe provide better promotions and things to get people hooked, maybe new games, especially in DraftKings when it comes to daily fantasy sports and things of that nature. We love sports, especially as Americans, and I know we love betting sports. We love gambling as well, responsibly, of course. So it's one company that did well today, despite some of those household names. NVIDIA was down 4% plus today. Palo Alto cybersecurity company is down just under 3% today. Amazon was making its way out of its hole, but closed down just over 1.5%. So volatile day in the market. Hopefully there's better days ahead. Hopefully someone takes his phone and maybe forgets his password to Truth Social for a little bit, and we can let these markets rally. But let me know what you guys are invested in while this market is dipping and correcting a little bit. And let me know if you're in any of our trades that we're in, or if you're interested in following our trades or seeing our strategies, jump in the Patreon. Have a wonderful evening.